The Feds don't want banks failing. Okay?
No,
they
of course
bailed them
not.
out last time. They'll bail them out this time. They'll bail them out the next time it happens.
They'll bail out.
The game's rigged. And here's the reality is that we pay with it through inflation.
Exactly.
This is what people don't understand.
First thing we're going to talk about today. I saw something on Twitter and it said, over the last 20 years, Canadian home prices have quadrupled while the overall inflation rate in Canada has increased by 49%. This is a bubble of epic proportions.
Oh, interesting.
Okay? Look at the graph.
That's up and to the right, man. Holy smokes.
I know, but that's not the point.
Well, what's your point here?
20 years?
20 years?
Like, really? We're in a 20-year bubble?
Oh, yeah.
Do you get what I mean?
Yeah,
Like
it's always a bubble.
Like, that's the point that I'm trying to make is that, okay, the last 2 years, the market hasn't crashed, so let's go back 5.
Yeah.
Okay, if the last 5 years hasn't crashed, let's go back 10.
Yeah.
If the last 10 years hasn't gone back, let's go back 20.
Yeah.
Well, why don't we just make it 100 years?
Yeah.
Why don't we make it
never-ending
a
game.
full fucking century to go back to, right? So I think it's hilarious. And let's see on this graph, in 2008, take a look at what 2008 did. Look at the home values from 2000, or not home values, but
Home prices.
the home prices and expressed as a percentage. Look at that.
Yeah, it's a blip in the radar.
Exactly.
Like,
It's a blip, right?
Yeah.
Now, this is unprecedented because I think a lot of shit ended up happening over in the last 3 years.
Mm-hmm.
But this is indicative, I feel, of an unreasonable market, right?
it was reasonable at the time because you gave people free money.
Yeah, but this blip here between, like, because of COVID, because of all of those inflationary policies that they put together, that's what caused that. That's what caused that right
yeah,
there.
it was abnormal. Yeah,
Exactly. It was abnormal. It was a fucking
So
black swan
what
event.
do we make of this? Like, number one, I take from that chart,
Yeah.
everything's a bubble all the time.
Exactly.
To me, a bubble can only exist when you have oversupply of something,
Yeah,
which we just
of course.
don't have.
Yeah.
So how is it a bubble?
It's not.
You could say that prices went up because money was cheaper, and there's a ratio that makes sense. I agree with that.
Yeah.
But realistically, like we always talk about this, if the inflation rate was 50% over that period of time, right? That's core inflation. Okay,
Yeah.
Core inflation's goods that are easily reproduced.
Yeah.
So, is housing easy to reproduce and cost effective? Of course not.
Yeah.
So housing is going to go up more than inflation to begin
sure.
with.
Yeah.
Number one. Number two, it's also huge supply demand imbalance.
Yeah.
Right. So
Huge.
yeah. And then number three, we always talk about the actual inflation rate that we should be using is the money supply increase, which is like 7 or 8% a year.
Yeah.
So, and because real estate's levered 5-1, you're using the bank's money to buy it. You can see how real estate's gonna like smash CPI
For sure.
almost in any given year.
You don't think we should still be using like milk and bread?
As our core inflation numbers? No, of course, of course, it doesn't make sense.
What the fuck?
It's insane.
I don't even know how we're still using that.
And even that core inflation's manipulated. So our
For
point
sure.
here is that, like, don't call it a bubble unless we're in an oversupplied environment, which
Yeah.
like we're not.
Yeah.
There's always pockets of oversupply. Like maybe
That's what happened in 2008. That was one of the
we always talk about
that was one of the issues that caused their bubble to pop is oversupply.
They were building way too many houses for the
Mostly
for the amount of people that could
condos,
afford them,
yeah,
and then they weren't
condos.
qualifying people
Exactly.
to buy them. So you'd have a development selling out,
Yeah.
in 50-unit development selling out in a month,
Yeah. It was like
with unqualified buyers.
yeah, exactly. It's a perfect storm. Yeah.
Yeah, so then-
oversupply and unqualified people to buy that oversupply.
So when you're selling out a development in a month, you go do another one, and the game became a Ponzi scheme.
For sure.
All I'm saying is that's not happening anymore.
No, it's not.
In Canada, for number one. Number two, it's probably not happening in the States
No.
en masse.
No.
And if it is, it's not. It's going to be isolated pockets, not like the top tier cities.
Yeah.
Where you're going to be insulated because there's just global demand for that stuff. So
Canada is tighter, but from the 2008 Great Recession experience that the U.S. had and the lenders had, they are not using the same practices to be able to do this kind of stuff. And SVB is not indicative of a similar situation of poor banking practices. It's not. They were in a very risky environment. They dealt with very risky situations and VCs and the tech industry and the tech bubble. You want to call anything a tech bubble or a bubble that's happened in the last couple of years? A tech bubble was something. Those guys were burning through 15% of their available cash. Like I think it was like every month or every quarter or something like that. Something stupid. So of course, what do you think is going to happen when everything started drying up in the tech world? What do you think they're going to do? They're going to start dipping into their deposits. Of course.
Yeah, it's
going to happen.
And then what happens is the SVB takes the deposits, puts them into bonds.
Long-term bonds, right?
Which are illiquid, and the value of the bonds went down drastically because the rates went up.
So a lot of people
now you have a bank. What they consider a bank run, but it's really just venture capital needing their money.
Exactly, 100%.
Yeah, so
exactly.
That's people are trying to they're trying to extrapolate that across the whole banking industry, and of course, Canadian banks are just that doesn't happen really in Canadian banks, not the big five.
No.
So there's that systemic risk of banks isn't really there.
No.
And then what do you see the Fed's already doing? Oh, we're going to backstop all the deposits, right?
Yeah.
So the Feds don't want banks failing. Okay?
No,
they bailed them out last time. They'll bail them out this time. They'll bail them out the next time it happens.
They'll bail out.
The game's rigged. And here's the reality is that we pay with it through inflation.
Exactly.
This is what people don't understand. When that bank bails out, you go look at the money printing chart, the M2 money supply chart. It's like this through COVID, and then when they started tightening, money supply contracts.
Mm-hmm.
Bank fails, money supply up 20% in a week.
Yeah.
That money supply increase means the value of your currency is decreased because they just injected more money into the system.
Yeah.
Which makes your money more valuable, which means you need more of the same amount of money.
Less valuable.
Yeah. You need more of the money to buy the same thing you could buy yesterday.
Yeah, things just aren't costing more. It's you need more of money to buy it.
Your money's worth less.
Exactly.
They're the same thing. It's six and one, half dozen the other. So people just don't understand how money works, and there's this always like we've been on Twitter a lot lately. I love Twitter. But man, it's just nonstop bubble, crash, world's crash.
It really is.
And then you have to sit there and say, the game is rigged. Yeah, there's a lot of misallocation of money out there, but like the banks and the Feds are just going to step in and like backstop it so it doesn't become systemic.
Or they're going to throw some other fucking black swan event into the mix where, it doesn't allow things to I almost feel like the SVB, failure was almost premeditated, to actually cause a tightening in lending where they didn't have to continue to increase rates to stop people.
I think it's even more nefarious than that, which is they want a consolidation of banks in the U.S. And the big banks aren't facing this problem, right? They have, what's actually happening is people are leaving the SVPs and the smaller banks and they're bringing their capital to the big banks because they're FDIC insured.
That's a big bank, though. SVB was a big bank.
They're big, but they're not.
It was a niche
they're
bank.
Not the top.
No, it was a niche
They're not
bank.
the top 5.
It was like, what, top 40? Yeah, top 40.
They're big, and relative to Canada, they're big. But the top, it's like, CIBC, RBC, Scotiabank in Canada.
You think they're trying to go to like single-digit numbers?
That would be very difficult.
Right? There's like 4,000 banks, something like that.
It's gone down a lot. But it's the less banks, the more power, right? We always say that the Federal Reserve has and all that stuff.
But you're not seeing bank runs on like the regional banks, right? You're not seeing any of that kind of stuff. They're not like being affected.
Yes. Yeah. Yeah. It's a little bit of a conspiracy theory, but I think it's an isolated incident, and I don't think they're gonna. If it is systemic, they're gonna backstop it.
Yeah.
And prevent.
Yeah, they don't want another Great Recession or 2000. Like they're not gonna have that happen.
It's just not good for votes. We got an election year coming up as well. Like, you know what I mean? Like when you think bigger than just.
I am seeing so much shit indicative of that rates are going to be dropping again. Come 2024, even like later this year, I am seeing it so much. So like, man, if that ends up happening, you had better get in now, because if that shit, I just saw a tweet from some financial guy or whatever the fuck he was, saying that he expects rates to be down to 3% again in 2024. And starting to hit 4% the end of this year is what he's thinking. If that happens, dude, shit is going to get outrageously expensive again.
Yes, and a lot like the rate hikes and pauses and declines are going to be based on inflation.
Mm-hmm.
Okay, there's a lot of signs that inflation is coming down.
Yeah,
you see, there's tons of charts on that we look at and stuff like that. Even producer producer price index, which is the input cost, right? Like if you're a producer, your inputs are what measures that, right? So if you need whey from New Zealand or your whatever.
Yeah.
So the PPI is coming down. Like there's all these things, right? Inflation's coming down month over month and year over year. So once inflation's under control, then they have the ability to
might as well
drop
just
rates.
keep doing it. Yeah.
And I don't know if they'll go down to 3%. Like we always said, like these are kind of normal numbers historically. It might not drop that much, but like the thing you always say is the big rate shock has been digested.
Yeah.
They don't really need to come down.
But I'm telling, dude, like with what you're seeing and the activity that you've already seen from not having the Feds increase rates again and pausing them. Could you imagine if they start going the other way?
Oh man,
like it's gonna
that
be
is
nuts.
100% chance, and I'm talking even a quarter point.
That's what I mean.
It
sends like a fucking wave through the market.
Yeah, because once the digestion has taken place, then fundamentals come into play.
Yeah.
Then it's just a matter of there's a 500 first-time home buyers in the market. There's only 100 first-time home buyer houses for sale. You've got a 4-to-1 ratio. Prices are going to go up, just like any other market.
Yeah.
We are undersupplied by millions of homes. It's going to play out.
Yeah.
Now, if they raise rates again, you're going to see prices dip again, right? If they, and the reverse is true, if they drop rates, you're going to see prices spike up.
Fuck. So that means that if prices go up again, like the average home price in Windsor right now is like what, 530? Is that what it is? Somewhere around those lines.
Yeah, let's call it 530.
Yeah, 530.
Pretty good number.
Like what do you have to rent that house for to be cash flow positive?
It doesn't work at those.
It doesn't work.
You're talking $3,000.
Do you know what I'm saying? Like and then like $3,000. That's $36,000 a year just in rent alone. When the average person or household makes around like what in Windsor? What is it?
Like dual income is I think $90,000 or something.
$90,000. Yeah. So that's like that's 40% of your income going to a property, because like at the end of the day, like you're probably not going to be able to afford that house. And then if in that kind of scenario, like a normal person, or not a normal person, but like the lower to middle class is not going to be able to afford that house. So then what happens if that 4-to-1 ratio or 5-to-1 ratio comes into play? They start dropping rates, right? Then you're just going to have a bunch of these people that just can't even afford it. So they're going to turn into renters, but then they can't afford the rent. So like, where does the investor play into, like, where does it, you see what I'm saying? Like
then there's less investment properties, there's less rentals, and then there's more demand for rentals. So, they are trying to clean that up by building more rentals, and they're going to have to, right? Yeah. Number one. Number two, you already see what happens when people can't afford stuff. They come in with incentives, and they give, here's a $400 rent payment assistance, right? They did that last year, I think $500 for if your wages were below a certain threshold.
Yeah.
Like it's Band-Aids, and
it kicks the can down the road.
The sink is the ship is sinking, but I don't actually think it's sinking, right? I don't think the end of the world is coming. It's just like a moving target, and the game is always being won by people that own assets. It's always being won by people that own businesses, and the lower middle class is getting priced out, and the government comes in to save them. And they love, $400. Oh, they're giving me $400 for my groceries. Yay, thank you, government. But they're the ones causing the problem.
Yeah,
and the problem is that when you don't understand the game, is you don't take advantage of the game. Like once I learned to understand the game, it's like, oh shoot, I better go buy some assets. I better be the real estate owner, right? And there's ways to make money. So you buy multifamily or buy something, put a basement apartment. There's your cash flow, right? You can create cash flow even in this environment because rents are very high, vacancy is very low, and they're going up, by the way. Yeah. So like there's still ways to go. It's just single family doesn't work. And new construction condo doesn't work. So I don't buy those. I buy other things.
Yeah.
But you want to own assets.
Yeah.
And if you don't, you're screwed.
I just wanted to talk about that graph because I thought that was the dumbest fucking shit I've seen in a long time. And that guy's like well respected.
Yeah, I like the guy that's the stuff the guy poses. Yeah, Charlie Bell.
Yeah, but he like really with that graph, dude. 20-year bubble. Like it made no sense to me when he's like, oh, it's a bubble of epic magnitudes, and it's look at the last 20 years, and I'm like 20 years. Like that's a long enough time to be indicative of like, hey, listen. The graph's going up, and there's nothing you're going to do to stop it.
Here's the thing. It's been I guarantee you go back every one of those years for 20 years, and every year people have been calling it a bubble.
I'd like to see that graph.
Guaranteed.
He's Canadian, right, that guy?
He posts a lot about Canada. I don't know if he's Canadian or not. But
that graph must be Canadian because in the 2008 Great Recession, the line doesn't go down.
The graph is Canadian, but he doesn't post only Canadian stuff. Like he's posted a lot of US CPI stuff. as well. So, anyways, who cares?
Well,
the point is that when you cry wolf for 20 years straight that it's a bubble, nobody's going to listen.
Or eventually, eventually something's going to happen.
Well, it did happen. You saw a 25% dip.
Yeah. Yeah, in 2009 it fucking dipped. Yeah,
and
it was Canadian, yeah.
Well, it dipped in 2009. It also dipped in 2022.
Yeah.
Right? That was the dip there.
Big one, yeah.
So, whatever. Anyways, everything's a bubble all the time.
The graph is going up to the right. That's
I won't call it a bubble until we're in an oversupplied environment. Until then, I'll call it prices adjusting to borrowing costs.
Yeah.
That's it. And then once they adjust, which it will eventually, right? Whether it's a year, 2 years, 3 years.
Yeah.
Once it adjusts, then fundamentals take over. So we'll leave it at that.
100%.